Hey everybody, it's Jack, and I hope you're all having an amazing weekend. Because it's the weekend, it's therefore time for another WealthSimple Small Account Challenge update video. We just finished week number 8 of my Small Account Challenge, where my goal is to bring a $1,000 account up to $100,000 through saving like crazy and smart investing, with the end goal of one day being able to retire off of my investments. Ideally, the sooner the better, but hey, I'll take it at any stage in life. As per usual with these types of videos, I'll first go over the week that was. I'll briefly touch on the stock market as a whole, and then I'll get into my account status and all the stocks that I added to my account last week. We'll then dive into my spreadsheet and I'll go over my entire portfolio breakdown, and then I'll touch on my watch list for the week ahead and my overall thoughts on the stock market going into next week. So this is going to be another informative video. I hope you guys all enjoy, and let's jump right in. So first, briefly touching on the stock market last week, it was yet again another back and forth week, with the stock market ending about where it started the week. So not a whole lot of change. We saw some up days and then we saw some down days, and it was quite a mix. This seems to be a constant trend, as over the last few weeks, it's been like this time and time again. So we're in a market that can't make up its mind whether it wants to continue a correction or start to go back in the upwards direction. Only time will tell. Jumping right into how my account is doing and my overall account status. My account currently sits at $3,409.82. On Friday, we were up $2.49 or 0.07%. So basically no change on Friday. As for the week, I was actually down $53, 1.54%. And this was because two of my largest positions had quite significant declines over the week. And I'll touch on and explain both of those positions. But for the actual past month, we are up 3.74% or $122. The last few weeks, I've forgotten to show my all-time progress, and you guys have been asking for that. So my all-time account is up $49.82 for 1.48%. We were sitting at a nice 3 to 4% gain on the overall account before this week, so not the ideal week for the portfolio. So touching on the first position in my account that had a not so great week, it was H2O Innovations, HEO. It saw a decline of just over 10% on the week, and this is my second largest position, so it brought down the account. If you've been following my channel for a while, you know that H2O was one of the very first stocks that I added to this portfolio in early February, and then almost immediately we saw that slight correction in the market, and growth stocks took quite a big hit, and H2O Innovations actually sold off around 30%. As it sold off, I continued to dollar cost average and add a few shares here and there, bringing down my cost basis. So my average cost basis for H2O is actually $2.95, so it's quite high. We actually saw early on in the week, H2O got back up to this point and actually got to break even for me, and then it immediately shot down later in the week, 15%. H2O is a position that I plan to hold for a decade or more. This is one that works in the water treatment space. As the world over the next few years has to deal with its shortage of fresh water, I think H2O is in a great position to continue to grow over the next decade and into the future. So I plan on holding this one long term, and I'm not worried about the day-to-day swings or even the week-to-week swings. This is one that if it continues to go down even further, I'll just add to my position and add more shares, bringing down my cost basis and dollar cost averaging in at a more favorable price. So again, this is not one I'm worried about long term. The second one of my main positions that took quite a bit of a hit this week was actually TELUS, one of my safer dividend growth stocks. If you own TELUS, you'll have noticed that it took an over 3% hit on Friday. Basically, news came out on Friday that TELUS was taking on a new round of investments, a new offering, so new shares created in order to raise $1.3 billion for the company to expand and grow its 5G operations. I personally think this was a proactive move because of the Rogers Shaw acquisition. I think that TELUS sees the competition and sees what Rogers is doing and really wants to ramp up and beef up its 5G operations in order to compete with Rogers. So as a TELUS shareholder, I actually don't mind this in the long run. I think this is a smart move, and like I said, a proactive one to the Rogers deal, trying to put TELUS in a better position for long-term growth. I actually like this move as a whole. And the reason the share price dropped because of this is because they added more shares to these private investors. It brings down and dilutes all the other shareholders that are currently invested in TELUS. And the private shareholders actually got in at just over $25 per share for TELUS. So you'll notice that that's the price that TELUS immediately shot down to on Friday when this news broke. And that's usually the case. Usually the price will drop or increase to where the new investors bought in at. So this was no different with TELUS. And again, I think this is honestly a smart move in the long run. I don't plan on selling my shares anytime soon. They offer a great dividend, and I see this company growing over the years. Now that I've quickly covered why my account saw a decrease over this past week, let me now get into the stocks that I bought last week. I actually added one brand new position to my account. If you watched my last week's video, I mentioned that I was going to start a position in TD Bank, ticker symbol TD, one of Canada's biggest banks. And I did just that. I started a small position in TD. I bought just one share of TD, around $81.68. So it's already seen a little bit of an increase from there. But this is a position that I will continue to build up over the coming months. I've been seeing a lot in the comments, people asking if now is a good time to buy the Canadian banks because they are trading relatively close to all-time highs. So let me quickly explain my thought process when it comes to adding a new position to your account that is close to all-time highs. Again, I can't stress this enough. Dollar cost averaging is your best friend. Don't just lump sum and buy all your shares of TD because it is near an all-time high. It might continue to go higher, but it also might decrease in price. So my recommended strategy for this is to dollar cost average. It will be your best friend in the long run and make sure that you get in safely and efficiently. If you look at these past charts and past studies, you'll see that when we compare dollar cost averaging to perfectly timing the market and being able to buy perfectly every single dip will give you a slight increase in the long term if you are able to perfectly time. And I can't stress that enough. You're not going to be able to perfectly time every single dip. Dollar cost averaging in the long run is the best way to ensure safe and stable returns and not missing out on great opportunities. I do think the big banks will continue to grow over the next year, TD especially. So starting a position and then every few weeks, constantly adding one share here or there, or every month, depending on how much you have to invest, is the safest route to go and definitely one that I recommend. So let's now jump into my Excel spreadsheet where I track my passive income from my dividends. As well, I'll cover all the stock positions that I added to over the past week and how many shares of each. Here's my Excel spreadsheet where I track my dividend income alongside my portfolio breakdown in a simple and easy way. Over the next few weeks, I do plan to migrate this over to a Google Sheets. Google Sheets offers a little more functionality when it comes to real-time stock prices, as well as the ease of access for everyone. All of you might not have Microsoft Excel or might not be comfortable with it. So for that reason, I plan to migrate. Hopefully that makes it easier for you all to use. I will also plan on adding a few more charts, such as one for sector allocation. So you'll see how much percentage of your portfolio is in utilities, financials, oil and gas, REITs, things like that. So stay tuned for these changes. Anyways, let's now focus on the stock positions that I added to last week. So as I previously mentioned, I added TD Bank. I added one share at $81.68. But besides TD, my main focus last week was split between adding to my smaller growth stock positions, such as Good Natured Products and Greenlane Renewables. I bumped both of those up. So I added around 75 shares of Good Natured Products. I actually doubled my position size. I added 25 shares early in the week. And then later in the week, Good Natured Products, GDNP, shot down to around $1 per share. And I picked up 50 more. I thought that was a really good price. And I really think this stock could be a $2 stock in the next little while. I also added 15 shares to Greenlane Renewables. It also saw a pretty up and down week. So I added shares below the $2 range, which was my goal from last week's video. And then I also focused on adding to some of my high dividend yield positions, such as Enbridge. I bought one more share of Enbridge, just under $46. So I did bring my cost up a bit, but I think Enbridge is a great stock as a recovery play in the short term. I think it will see $50 plus per share in the short term, and it also offers that 7% dividend. I also added one more share to my Smart Centers SRU position. This is a REIT that offers a 7% dividend, and it pays a monthly dividend, which is really nice for that monthly cash flow. So for that reason, I added one more share to Smart Centers. And then finally, the last stock I added to was a little bit on the fly. As I mentioned on Friday, after the news came out of TELUS, its share price dropped 3 to 4%. So I capitalized on that opportunity and purchased 2 shares of TELUS at just over $25. And this is one I will continue to add to if it keeps on dropping over the next little while. This is a great stock that I really want to build up my position in. It has a great dividend. And again, I think it will continue to grow over the years. So TELUS is a no-brainer for me. So those were all the positions I added to this previous week. Let's now get into my dividend tracking. So if we check my dividend tracking, we can see that the previous week was around $63, $62.90. And now my annual dividends are $73.73. So we were able to increase our annual dividends over $10 last week by adding a few shares of those high yield dividend stocks. And our monthly average went from $5.24 to over $6, where every week we're chipping away by adding dividend stocks, and we're going to see that monthly average and that annual dividend continue to grow and grow, and it will begin to snowball and increase even faster and faster to hopefully one day where our dividend income will be able to supply our retirement needs. So now if we jump into my portfolio breakdown, again, as usual, we can still see that Standard Lithium and H2O Innovations both take up the highest positions in my account at 17% and 13%. I am still working on bringing these down in weighting as I add more aggressively to other positions and hopefully bring them down over time. Standard Lithium actually had a pretty decent week. At one point, it was trading at over $4.15, so it had a really strong rally middle of the week. It did come back down a little bit at the end of the week. This is a stock that I'm extra bullish on recently, as there's been rumors that it's going to be uplisting to the New York Stock Exchange over the next little while, potentially. And this will help bring new investors onto the stock and make it easier for US investors to get into Standard Lithium. And again, this is one that's in the EV supply chain, so I'm very bullish on Standard Lithium in the long term. This is a long-term play. And we can see that my weightings of Good Natured Products and GRN both came up, so they now take up 5 and 6% of my portfolio. And now my overall penny stocks or high growth stocks take up around 40%, just over 40% of the portfolio. So I am still going to try to bring this down over the next little while by adding more to my ETFs and my dividend positions. All my dividend stocks also currently take up around 40% of my account, and the ETFs take up the other 20. So it's currently a 40-40-20 split. And when it comes to my dividend stocks, we can see that TELUS is at 10% and AQN is at 9%. Those are my two largest dividend positions. And then when it comes to ETFs, my largest ETF positions are QQC-F, the NASDAQ 100 ETF, as well as VDY, the Canadian High Yield Dividend ETF, which pays a really solid 4% dividend and gives you exposure to a lot of great Canadian dividend companies. So that's my portfolio breakdown and the different weightings of all my stocks. Now let's jump into this week's watch list. So this week's watch list is going to be mostly focused on ETFs again. I'm going to be adding to my smaller ETF positions. The first one is Canadian Tech ETF, XIT. We've seen a little bit of a sell-off when it comes to tech stocks over the last few weeks when it comes to both US and Canadian tech stocks. So XIT I'm currently down on around 3 to 4% from when I first added 2 shares. So I plan to add another 2 shares if tech continues to sell off and we see an even further reduction in XIT. Hopefully I can add some more shares under $44 per share. This would be my ideal price range as I want more exposure to tech, but I also want to bring down my cost basis by a decent amount. So that would be a win-win. And then I also want to add to my other smallest ETF position. This one is great for bringing down your overall risk in your account as it does have a lot of holdings within this ETF. It's also very stable and consistently returns 5 to 7% on an annual basis. And it also gives me more exposure to the US stock market. So this is going to be another one that I'll add over the following week. And then when it comes to dividend stocks on my watch list, like I said, TELUS is number 1 on my watch list. It's one that I'm going to be seeing how it plays out over the next week. The news came out on Friday, so there's still going to be a couple days to see which direction the stock goes. Again, I plan to add 2 shares to TELUS if it drops more on Monday, Tuesday, and goes below that $25 range. I think that is a great price to buy into TELUS as it offers that great dividend and will continue to see growth. And then TD Bank. TD Bank's going to be on my watch list for a long time. I want to add 1 more share of TD if it drops below the current price that I have it at, around $81.50. If that happens, I'll be adding another one. I'm going to be patient on this one. I'm not going to rush into buying TD as it is near all-time highs, so I am playing carefully with this one. And then as usual, the third one on my watch list is the Vanguard Canadian Dividend ETF, VDY. This is one that I add on a weekly basis to continue to build up that dividend. It gives me diversification to even more Canadian dividend paying companies in a really safe and reliable way. So I love VDY. And that is my watch list for the upcoming week. That's my watch list for the week ahead. I plan to add primarily to my ETF positions. XIT is the main one. Tech sold off quite a bit last week, and I want to see if it continues to sell off. If we see Shopify and some of the other big Canadian tech companies come a bit further down in price, I will definitely be adding to my ETF, as in the long run, I think these are great stocks to invest in, and this ETF is a great way to get exposure to some of these big companies that trade at share prices above $1,000. I'll also be adding to my other ETFs such as VDY and VFV just to overall get more dividends into the account and stabilize it a bit more, as it still is pretty growth stock heavy. As I also mentioned, I do plan on dollar cost averaging into some more of my dividend stock positions, such as TD. If it comes down below where I bought, I'll add another share. I'm also going to be watching TELUS very closely this coming week because of the investment they took on and the new shares they just added, I think we might see TELUS dip a bit further. And if it goes below $25, I'm definitely gonna be adding a few shares to TELUS. I think this is a great long-term play. Now comes the part of the video where I urge you to start your own investment journey and challenge yourself, set a goal, and start chipping away towards it. It's definitely life-changing and you will not regret it. If you've been thinking about starting investing and you've always been like, oh, I don't know if now is the perfect time, any time is the perfect time. I urge you to start today. I'll put a WealthSimple link below where if you sign up and start investing with WealthSimple, Canada's only $0 commission platform, where you have no fees for trading Canadian stocks. It's the only place where you can buy one share for $1 and have absolutely no fees. It's awesome, so I highly recommend it. Again, there'll be a link below. When you use the link and open an account, when you trade your first $100, you're gonna get $10 free from WealthSimple. So an immediate 10% return on your investment, a great deal. And again, set a challenge, chip away at it, and you will not regret it in the long run. And I hope you guys enjoyed this video. If you did, as always, smash that like button and subscribe to the channel. A lot more content coming, and I'll appreciate it. I'll see you in the next one.